Hello viewers, welcome to Forex Flow weekly analysis for March 16th to 20th. If you stay with me for another 10 minutes, we'll look at the forecast for the coming week. As you know, there was a lot of selling pressure in the stock markets, not only Dow Jones and S&P, but all over the world. Markets were crashing, as well as there was tremendous volatility in the Forex currencies, along with oil prices that crashed on Monday. So we'll look at that, the impact of that on Forex currencies in this video. Before we start, do subscribe to my channel and in the end leave your feedback in the comment section. Here on the screen, you're looking at EURUSD daily chart, and last week ended here with this candle, and we were saying that if the price breaks above that 1350, 1355, then you can enter into a buy trade and you can extend it. That would go all the way up to 114 with extension to 115, and if it breaks below that, then you can enter into a sell trade, and our target was 112. So both the scenarios were true, and you know that the market opened here with 1355 or higher, and then it straight went to 114. The next day we saw that the price euro was going up and up, and it reached here almost to 114.97, and then we have seen the selling pressure here the next day, Tuesday, Wednesday, all the way to Friday, and it reached down here to 112 and dipped down here to this 50-day moving average, which is sitting at 111. It dipped a little bit below that to 110.60, but it went up again. So what happened here? Let's analyze that. We were saying that there was a buying pressure that was coming 2 weeks ago when the price dipped down here to 107. Forecast was the price would go up. If you were holding a long position, you were in profit, you could extend your profit as per the forecast given. You can extend it all the way here to 114.97 or 115. But if you were looking forward to a sell trade, then the scenario was that the price had to make a reversal candle, and that is what we were looking forward here on Monday, but we didn't see that. Instead it made a huge green candle here, and the reason for that was oil price crashed. So we know that in the deal that was going to happen between OPEC and Russia, that failed, and as a result there was too much volatility in oil prices, and all of a sudden price crashed all the way down to $27.50, and after that it had a little bit recovery, but it's still staying very low. So what happened here? The euro was in demand because US dollar is tied to the oil price, and there was a demand of euro because investors were looking for a safe haven, and they wanted to sell USD and wanted to buy euro. Along with the overall situation with coronavirus, we saw that there was a fear about that in the US market, so we have seen the price of euro was going up. If you look at the monthly chart, you will notice that the price is rejected at the 50-day moving average on the monthly chart. So this candle was actually going up here, and you see it just got rejected around 115 where this 50-day moving average is coming, and after that we have seen a lot of selling pressure here. So this was the area where we were expecting for traders to take profit. Now I'm going to move this up all the way here, this orange line, so you know that this is your top here, and after that we have seen a lot of selling pressure here, and because the expectation was that the ECB, the European Central Bank, was supposed to cut down on interest rate and give relief to European business. The markets were expecting the interest rate cut, but it was not announced by the central bank. Rather, they maintained the current interest rates. So people started selling Euro USD here, and then we have seen since then the euro is going, this pair is going down. So with that news, the expectation was that you would take a sell position if the price dipped below the top of this candle, which was last Friday around 113.50. If the price were to break below that, then you could enter into a sell trade. So let's say you had opportunity to enter into a sell trade around here, around 113 to 113.50, then you should have about 200 pips here, opportunity to make profit. Now what's there for the coming week? Here you can say that if you look at the weekly candle, you can see that it has made a huge inverted hammer, and the price is now heading downward. So this is a clear signal that the price will continue to go down as the European Central Bank has not cut the interest rates. So the hope is that the USD will again get stronghold, and a lot of investors have confidence in investing in USD, so the price will continue to go down. But here on this support area around 111, you have to be careful because this is 50-day and 20-day moving averages. You know, this cross is going to happen. 20-day will cross 50-day moving average upward. Both are turning upward, and the RSI is currently sitting around 50, so it can bounce back from here. So you have to be very careful in this situation. Any news, any volatility can cause the price to go back up here around 114.50 to 115, and then it can go down again. So I would say if you had taken a sell position, you can hold it, lock your profit, and wait for the price action here on Monday and Tuesday. If you see the price is heading upward, you can certainly, your stop loss will trigger, you can take your profit. But if you are not holding a position, I would say wait on Monday and Tuesday and see the price action. Here you see this orange line. I'm going to bring it a little bit down. So now 110.75 is the target. If the price comes down here and breaks below these moving averages, then you can easily take a sell position, and our initial target in that case would be 109.50 with extension to 109. It can dip further down even below that, but our target would be 109. In that case, if the price bounces from here, let's say it dips down but it goes back up and close right above these moving averages, then that means that there's a lot of buying pressure below it, and then you don't want to enter into a sell trade. Rather, you want to wait and see which way the price goes. So in that case, I would say stay away from this pair because it can be very volatile, and before you enter into a buy or sell trade, please watch for the clear trend if the price is going upward or downward. The expectation is that if there is a good tax cut given here in the US, and if there is a recovery in the stock market, then you will see the USD will become stronger and this pair will go down, and our target of 109 will be met with extension to 108.50 or even 108. But if things continue to go like last week, then this can go sideways or it can go back up very quickly. So be careful when you enter into a buy or sell trade. That's for your USD. Now we're looking at pound USD. Here we were saying that if the price breaks below 127.50, then you can enter into a sell trade, and our target would be 125. And that's exactly what we have seen here. This was a great opportunity to make about 200 to 300 pips very easily. It's just going vertically down. So if you had taken a sell position here, you could close around 125. If you had a chance to extend your profit, I think now it's currently at 122.77. So this pair, if you look at the weekly chart, this will tell you a clear picture what's happening here. This is making a double top here, and then it's making this M pattern all the way, it's going down. So the target would be 120 in the long run, and it can, in the coming week, we can see that it can go up a little bit, but then the price should be rejected, and then it should be going down to 121 with extension to 120. However, if you see the price is going sideways, then I would say stay away from this pair because it can also be very volatile like this, and it can go back up very quickly if there is not sufficient tax cut given in the US, or the situation continues to get worse in regards to coronavirus. If you're a seller, you can extend your profit. If you are waiting for the buy position, I would say wait for the price to come down here to 120 and then take a buy position. If you look at the RSI, it's very close to 20, but it has not gone below that. So we will wait in the coming week. If the price continues to go down, it may go up a little bit and then it can go down. In either case, if it breaks above this orange line around 125, then and it closes above that, then that would be a signal with the greens, with the strong green candle. Then you can easily take a buy position, and you can play about 200 to 300 pips of profit here, all the way to 127.50, which is the second line, orange line here. That's for pound USD. Here now we're looking at USDCAD. This is a true example of what happened with the oil price. As I've been telling in the past, that this pair is strongly related to oil prices, and we were talking about that last week as well, that this was going up. as the oil price was heading downward from $50 to 45 to 43. That's where it closed, and then all of a sudden on Monday, when we noticed that the oil prices crashed, then this pair opened very high with this gap of about 100 or 150 pips. And since then it's been going up. We have seen some profit taking happen here. So let's analyze what's there for the coming week. As you know, the oil price is going to stay low for now. We know that there was no deal between OPEC and Russia, and both are producing a lot of oil. There is too much oil in the market right now. So here, if the price continues to stay around $35 a barrel, then we'll see this pair will be fluctuating between 135 and 140. And if I put this orange line here as the top here, so this was an opportunity to enter into a sell trade around 139.93, I would say 140. That was the target to enter into a sell trade, and then we could easily make about 400 to 500 pips as it goes down back to 136. If the price of oil stays around 35, it goes back up to $40, then we'll see this pair will come down here to 135, maybe close this gap as well at this orange line, which is currently sitting at 134.52. If the price dips below $30 a barrel, then it can go back up. So you have to be very careful. This pair can also be very volatile, and you can see that it may break above 140 and it can go to 145. And the reason for that is, as you know, in the past we have seen that. If I look at the monthly chart, you will notice that this pair was at 146 at one point in time around 2016 when oil prices crashed to $30 a barrel. So we have seen that this spike happened, although it was there just for a month, but for a few months the price was staying between 135 and 140. And similar is the case here. Right now the price is heading upward, and it can go further up if the price if oil goes down below $30. If it goes back up, then you can easily play a sell trade here and wait for the price to go down, and that would be very profitable trade with 400 to 500 pips to close this gap around 134.50. That's for USD CAD. Now we are looking at gold. Here we were saying that 1700 is a target. If you see a price rejection around 1700, you can easily take a sell position, and that's exactly what we have seen here. On Monday we have seen the price went up here and it made this double top almost, and then the price was rejected and it went downward. So with these two candles, these two doji candles, this was a clear sign that now this pair was heading downward. And if you look at the line chart, this will tell you exactly what I'm talking about here. So it's making kind of a M pattern here with two double tops, and the price has gone down. So if you had taken a sell position, this was a great opportunity, and it did not respect any of the moving averages as we have seen in the past. Sometimes there is a lot of volatility in the market, especially last week when all the stock markets were crashing, everything was going down. We have seen that investors were selling gold and buying USD as USD was getting stronger. Now for the coming week, the target could be 1475. We know that this was a previous support, so if the price comes down here, it does not bounce from here, then it can go further down, but the expectation is by the time price comes down here to 1475, it may bounce. The RSI would be around 20, so it may give a little bit relief. It may retrace up all the way here to 50-day moving averages. So from 1475 to 1550, there is an opportunity to play a day trade. However, if the price comes down here and you see it's going sideways, it's making a bearish flag, then it can go further down, and that could be another 200 to 300 points down like this wave. So it can be very volatile again. It can go like this, and then it can drop like this, another 300-400 pips. So be careful with that, and do not start with a huge position. I would say play small trades and watch the price action very closely. Here we're looking at the crude oil. So last Friday it ended here. My forecast was that the price will dip down to 40. If it breaks below that, then it'll go down all the way down to 35. And that's exactly what we have seen. I gave signal around this area around 50 a barrel, and I was saying the price will come down here, then it may get rejected from these moving averages, and our target was $40 a barrel. If you were watching my videos and you had taken a sell position, congratulations. With this oil crash, you would have made a lot of profit here when the price crashed down here. So with this dip down here, I think this was an opportunity for you to close your sell trades and wait for the price action. We see that, you know, it recovered a little bit. Obviously it opened with a huge gap on Monday, and then it went up a little bit. Now it's going down again. But now if you look at, we have to set a bottom here. So currently there is no way to clearly say where the bottom is going to be. If we look at the chart, let's say we say it's around here, around 27.50. The price may come down here in the coming week, and if it gets support here, then it can bounce back, and that would easily take it back to $40, or it can go back up here to this candle where there is a gap here all the way to 87 or $41 a barrel. So in the coming week, we'll be looking for the price to come down here. If it bounces from this orange line around $27, it can go back up all the way here to $41. If it continues to go down here and go sideways, then I would say wait for the news or some clear direction from OPEC or oil producing countries to see what strategy they have for the summer and how the price is going to react in the future. But it may break below this. So if you were a seller around here, you should be closing your position. I think this was a tremendous profit that you could have already made. If you're looking for the next trade, I would say wait for the price to come down here, and then watch for a strong buying pressure here with the solid green candle. You can take a buy position, let the price go up. If it goes sideways, I would say stay away from it. If it breaks below that, then you can wait for the price to enter into a buy trade around $25 a barrel. And my advice is to not enter into a huge buy or sell position. Take small positions and look at the price action. With this volatility currently in the market, with the coronavirus situation and oil prices crashed in the market, we know that there's a lot of selling happening with the stock markets, and investors are looking for an opportunity to enter into currencies or other commodities which are safe haven right now. You have to watch the price action. In this case, look at the market sentiment and not look at the indicators very much, because they can be easily broken or they can be very deceiving. So you have to be looking at the sentiment, market sentiment, as well as the price action. So again, thank you for watching. Do subscribe to my channel and leave your feedback in the comment section.